Hi, I'm Pattu from freefincal, and let's talk about small cap mutual funds in some detail this week. So, the first video I like to talk about why small cap mutual funds should beat not just a small cap index, but they should try and beat a blend of mid and small cap indices, or maybe even a mid cap index. So that's what I'd written about in the morning today. So small cap mutual funds are kind of strange creatures because they'll give you spectacular returns and then they'll give you spectacular losses. If you look at the returns and invest, you will certainly burn your fingers. So you have to be really careful and uh, you must be ready to book profit from them systematically and also invest when they've fallen down. I think I have a video on this. I'll link it here. So the small cap universe is kind of big. So the top 100 stocks by free float market capitalization are classified as large cap. And more or less, these companies are well known and they're in the news because of their achievements, because of their profits. It's very hard for a fund manager to beat this universe. Then the mid cap is defined as the middle 150 stocks after the 100, and the small cap universe is the bottom 250 if you take the Nifty 500. But a small cap is essentially anything below the top 250 is essentially small cap. So it's a huge universe, and in this case, many companies will be unknown. The usual retail investors may not have information about many of the small companies. They usually don't get into researching them. So it's very easy in principle for a fund manager to beat a small cap index. An active small cap fund manager can easily beat a small cap index compared to a active large cap fund manager. But but it has to cut both ways. If the fund manager is beating the small cap index during good times, they should also beat the small cap index during bad times. And but the point is that what many people don't understand is, does a small cap index actually give better returns than a mid cap index? That's what we are going to find out. I had already talked about this. I had actually compared large cap versus small cap versus mid cap, and I showed you it's a misconception to assume that just by market cap, if you start investing, you will not get returns. Actually, active small cap fund management is intelligent investing, where the fund manager will have to balance the risk by adding large caps and mid caps tactically, or they will always have a large cap and mid cap exposure. That is the reason why they're able to get returns over the long term. I'd actually shown in another video, I'll link it also here, the most if to word it this way, the most popular reason for outperformance is actually downside protection. A mutual fund that falls lower than the index has a much higher chance of beating the benchmark over the long term in terms of return. So in that sense, I believe that small cap mutual funds should have strong downside protection against a very robust index, and that's what we're going to talk about this week. So we are going to consider three indices. Now, the Nifty Small Cap 250 is the most broad-based small cap index. There is a small cap 50 also. The small cap 250 index consists of the bottom 250 stocks of the Nifty 500. The Nifty Mid Cap 150, as I mentioned, is the middle 150 stocks of the Nifty 500, and is considered to comprise of the entire mid cap universe. There is a blend index called the Nifty mid small cap 400. So this is a combination of the small cap 250 plus mid cap 150, and this follows the market capitalization weights. So they will only weight the index as per the market cap of the stocks. This is different from the Nifty large mid cap 250 index, which has got 50% of large caps and 50% of mid caps. This is completely, all the 400 stocks will be weighted as per market capitalization, and this is the price variation. I'll show you here. This is the price variation. So this is the price variation since inception. It's not sorry, I think, whoops, I think, oh sorry, this is the price. I got ahead of myself. Sorry about that. So this is the price variation. I'm not sure if it's visible clearly. So These are optimized images. So the white is the Nifty small cap 250. The green is the Nifty mid small cap 450, and the yellow is the Nifty mid cap 150. It's a little bit unclear, I'm sorry about that. But the point I want to make is that if you look at the white line, this is the fall since January 2018. Notice that the mid cap has fallen lesser, and the blend index, the mid cap small cap index, is the market cap weighted blend has fallen in between the mid cap index and the small cap index. So my thought process is I would like a small cap index to beat the at least the mid small cap 400 index during bad times. Then I would be, as a small cap index, active small cap fund investor, I can sleep a little bit more peacefully. But of course, the first question I want to ask is that suppose I take 50% of Nifty mid cap 150 and 50% of Nifty small cap 250 and create a hybrid index. I had also had a video on how to create a hybrid index. There's not much difference. This is the white line is the 50% mid cap, 50% small cap. The yellow line is the Nifty mid small cap 400. There's practically no difference between the two indices. So it's pretty much okay to use the Nifty mid small cap 400. Now comes the shocker. Now, if you consider 10-year returns, look at this. This is the, now I hope the colors are clearer. The yellow is the Nifty mid cap 150. Look at how prominently the yellow has been on the top for most of the time. The blend index is in blue. The Nifty mid small cap 400 is in blue. And the other line is light green, I think is Nifty small cap. The Nifty small cap 250 is the bottom line. So notice that just taking small caps will not help you beat the mid cap index or even the large cap. I shown that earlier. You have to actively choose the small caps, because if you just randomly choose small caps by weight, many of them will fail and go away. So it's a very dangerous game. That is the reason why I'm saying for an active small cap fund, the Nifty mid cap 150 or at least the Nifty mid small cap 400 should be the benchmark, because that is harder to beat, because that has outperformed the bare market cap based small cap 250 index. This has got 1073 10-year data points. That's not bad. The same situation occurs over 7 years, where the yellow line is more or less on top, and this is over 5 years. Again, you can see there are distinct segments where the small cap index is the lowest here, also here, and that's the situation over 3 years. Again, there are pockets of underperformance, but of course, in over 3 years, the gap between the indices have kind of narrowed down a lot. But still, I believe that a small cap index should beat. As an investor, I would like the small cap index to beat the Nifty mid cap 150, preferably in terms of risk and reward. But as an analyst, at least it should beat the Nifty mid small cap 400 combined index. And I believe that the Nifty small cap 250 or even the small cap 50 for that matter is not really, what can I say, it's not a stringent index for small cap mutual funds. So what we will do maybe in the next video or a couple of days after that, we will discuss in detail on which small caps among the existing small caps with appreciable history have managed to beat the Nifty mid cap 150. We'll talk about that, and probably I've been asked to review DSP small cap by my friend and a couple of other requests as well. So I'll take that up as well. So I'll catch you in another video. Thank you for listening. Bye bye.